Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." It sounds simple until the stock market crashes, your portfolio turns red, and everyone around you is screaming, "Sell," before it's too late. So why is Buffett one of the few people who stays calm while the rest of the world panics? The answer isn't luck, and it isn't just experience. It's psychology. When markets fall, our brains switch into survival mode. Thousands of years ago, fear kept our ancestors alive. Today, that same instinct convinces investors that every market decline is a disaster. We see others selling, financial headlines predict doom, and suddenly doing nothing feels like the riskiest choice. That's herd mentality in action. Ironically, it's also one of the biggest reasons ordinary investors underperform. Warren Buffett trained himself to think differently. Instead of asking, "How much money am I losing today?" he asks, "Has the value of this business really changed?" That's a powerful shift. He isn't buying stock tickers, he's buying businesses. If a great company becomes cheaper because everyone is afraid, Buffett doesn't see danger, he sees opportunity. Think back to the 2008 financial crisis. Markets were collapsing. Fear dominated every headline. Many investors rushed to sell quality companies at bargain prices just to escape the uncertainty. Buffett did the opposite. He invested billions into strong businesses because he believed fear had pushed prices far below their true value. Years later, those investments generated enormous returns. This mindset isn't limited to billionaires. Imagine your favorite supermarket announces a 40% sale on everything you regularly buy. You wouldn't panic. You'd probably stock up. Yet when shares of excellent companies go on sale, many investors run away. Why? Because our emotions often overpower our logic. Patience is Buffett's greatest competitive advantage. He understands that wealth isn't built by reacting to every headline, but by making thoughtful decisions over decades. While others chase excitement, he embraces discipline. While others focus on today's price, he focuses on tomorrow's value. So the next time the market shakes, ask yourself one question. Am I reacting to fear or am I responding to facts? That single question can completely change the way you invest. Remember, the stock market often transfers wealth from the impatient to the patient. If you want to think like Warren Buffett, don't just study his investments, study his mindset. If you enjoyed this episode, subscribe for more insights into the psychology of investing, timeless wealth-building lessons, and the habits that separate successful investors from the crowd. Until next time, invest with patience, think independently, and let time become your greatest ally.